Ethereum, I think, has more upside because and that's why we call it the biggest macro trade over the next 10, 15 years, because of both Wall Street building on the blockchain and AI as well. So you have like sort of two cohorts actually probably deciding that it's really additive, right? Remember, the financial system is half of the economy. And in the stock market, financials are trading at a lower valuation than tech. So I think financials can re-rate in that world. But Ethereum is sort of the network value beneficiary. So I think Ethereum, between now and year end, let's say Bitcoin is 2x upside from here. I think Ethereum is more than 2x upside from here. But longer term, in the BitMine presentation, we pulled some work from Mosaics, and let's say it's 5-year view for Ethereum. It comes to around $60,000 per ETH. So a lot of upside in the next 5 years.
Ethereum is set to more than 2 times by the end of this year. And in just 5 years, it could skyrocket to $60,000, outpacing every other asset in the space. That's the latest message from Tom Lee, co-founder and head of research at Fundstrat. Right now, Ethereum is in a unique position because both Wall Street and artificial intelligence are building on its network. As more of the financial system moves onto blockchain, Lee believes Ethereum will capture that value and grow even faster than Bitcoin. Make sure to stick around until the end of the video as Tom Lee breaks down why Ethereum's upside could surpass Bitcoin's and how it might become the biggest macro trade of the next decade.
I think that, so there's some virtues of a crypto treasury, but I'll speak to Ethereum specifically, that make Ethereum treasuries pretty unique. And I think that's why there's so many in the Ethereum ecosystem. Because number one, Ethereum pays a native yield, a staking yield. And you might say, well, if you own an ETF, you can get the same yield. That's not true. The ETFs have liquidity requirements. So once they're allowed to stake, and they haven't gotten the green light to stake, they can't stake probably more than 50%.
Because of redemptions.
Yeah, because of redemption rates. So they wouldn't be compliant if they staked more than that. So an ETH treasury can stake 100% of the yield. But number two, because Ethereum is a proof of stake chain, power law comes into play. If an Ethereum treasury is large enough, they are a benevolent factor on Ethereum itself. Right. So let's say that BitMine wants to get to 5%. That's where power law kicks in, because that's when that entity can then work in a way that's benevolent to the system, whether it's seeding DeFi or providing liquidity to the system, or if Wall Street's trying to come onto Ethereum, you can become a staking partner, or do many of the other rails that will come with Ethereum. So in the crypto treasuries operate almost more like digital infrastructure because of the way they interact with the ecosystem. The third is, I don't think that it hasn't happened in Bitcoin yet, but the Ethereum world, if in the crypto winter you're describing and something trades below NAV, it's going to create incentives to do horizontal acquisitions, acquire other crypto treasuries. Or some of the crypto treasuries might work in the reverse direction and sell their ETH and buy back stock. And the fourth thing, which I would point out, is you're exactly highlighting a key issue, which is that a first principle of any crypto treasury should be having the cleanest possible balance sheet, because you don't want to have your volatility eradicated or debt to strangulate you. And that's why, a BitMine has only been doing straight common equity to raise capital. So no converts, which is essentially synthetic debt, and it robs your value. Ethereum, I think, has more upside because and that's why we call it the biggest macro trade over the next 10, 15 years, because of both Wall Street building on the blockchain and AI as well. So you have sort of two cohorts actually probably deciding that it's really additive, right? Remember, the financial system is half of the economy. And in the stock market, financials are trading at a lower valuation than tech. So I think financials can re-rate in that world. But Ethereum is sort of the network value beneficiary. So I think Ethereum, between now and year end, let's say Bitcoin is 2x upside from here. I think Ethereum is more than 2x upside from here. But longer term, in the BitMine presentation, we pulled some work from Mosaics, and let's say it's 5-year view for Ethereum. It comes to around $60,000 per ETH. So a lot of upside in the next 5 years.
Didn't you say you wouldn't be surprised there's a 50-50 chance that Ethereum could flip Bitcoin
so
as network value?
That's right. So I think that there's maybe at least a 50% chance Ethereum's network value flips Bitcoin. My friends that are in the real estate industry think there is a lot of value that's unlocked if you do tokenize, real estate RWA onto the blockchain, because you improve all elements of how you authenticate and actually conduct a real estate transaction, to how you track and record the prices, which allows you to then create more liquidity, which, as you know, in price discovery sometimes means higher prices. And of course, you would eliminate what are today's structural imbalances in real estate prices. So, yeah, it's a huge deal. But I would say one of the things is, like, to me, that's also when society sees the benefits of tokenizing, right? It actually probably reduces friction. I mean, I think it's really important, whatever future that crypto is building, that, they do think about wealth inequality. Not that it's a targeted thing, but it's important to make sure that we're not creating greater wealth inequality. And I think crypto is the opposite. Anybody can buy crypto. And I think that's why it's, to me, it's actually a democratizing actually wealth creation. I think in a world of Ethereum flipping Bitcoin, it does mean other chains do well, whether that's Solana or Sui. I think that there's a lot of value creation occurring as we tokenize a lot of things onto the blockchain.
But do you think the future is multiple chains or just one killer chain?
I think
TCP/IP type future.
That's probably a TBD, because I think that tribalism comes from people being too sure of singular outcomes. But if someone looks at the financial system, there aren't single standards, except for the dollar.
Tom Lee believes that crypto is not designed only for the wealthy. In fact, a large share of Ethereum holders come from lower and middle income groups. And this grassroots base has already played an active role in influencing politics and policy. Instead of concentrating wealth at the top, Ethereum has the potential to open new doors for ordinary people who have been excluded from traditional finance. In this way, it represents one of the most significant shifts in wealth creation that society has seen in decades.
I first started writing about crypto, advocating for Bitcoin in 2017. Well, Bitcoin and Ethereum. And we were recommending our clients either do 1% to 2% in Bitcoin only, or split 1% in Bitcoin, 1% in Ethereum. But in our view at the time, that 2017 moment for us was the idea that Bitcoin was going to be viewed as digital gold. So a really simple argument. We could explain that 97% of the price of Bitcoin came from just wallets and activity, but really the idea how Wall Street would adopt is digital gold. And that was 2017. It feels like that's 3 or 4 generations ago, because, in that ensuing 8-year period, crypto was met with a lot of skepticism by institutional investors, until recently. And as you know, the regulatory environment, especially for U.S. policymakers, was hostile to Bitcoin and crypto until this year. So I would say, even though it's been 8 to 9 years, it feels like 3 decades ago. When I was at JP Morgan, there were many conversations about Bitcoin when I was the chief strategist, and we had our macro calls. Which
I remember that.
Yeah, and our FX strategist at the time said that Bitcoin could become recognized as a digital currency someday, but the problem is that it's principally used by drug dealers and the dark web. So it was really deemed as a experiment, but only used for nefarious ways. Although people forget that pirates basically innovated gold. So I think it would have been impossible to actually have a view on Bitcoin and a firm like J.P. Morgan allow someone to actually publish the white paper we did publish in 2014. I know we also faced commercial setbacks when we wrote that first white paper on Bitcoin, and Bitcoin was under 1,000, but we said by 2022, so 5 years forward, the range of fair value was 22,000 to 66,000 for Bitcoin. But we said that, if you triangulate it would be roughly 25,000. We had clients actually cancel service on us. So we had some hedge funds famously tell us that they knew that we were so desperate that we lost all of our credibility because now we were talking about internet money as if it was a legitimate asset class. So it actually hurt us, and it probably didn't become a benefit for us as a company because we committed resources to it continuously since then until maybe 2021. I think when people talk about a crypto cycle and it being 4 years, there's probably some reflexivity at work because the original genesis was that, Bitcoin had a halving cycle. And so people were talking about a price cycle that really followed a Bitcoin in the halving. But in crypto, as you know, because there isn't a company, it's decentralized, and there's no centralized source of information, price itself often becomes really important, especially in the early days. So I think that there was a lot to people looking at patterns and then markets trading on those patterns. And the reality is that it's still true in the equity world because I can't tell you how many of our institutional clients still look at seasonality, which is just applying a calendar to what price action could be, either whether it's credit or volatility or equity. So every element of liquid markets today. I think that there is probably some credence because many people are positing that the 4-year cycle may not be in place anymore. Everybody from Bitwise, to David Bailey, so a lot of OGs. And that has to do with the fact that the incremental buyer of Bitcoin is no longer retail, which was really the story from inception up until probably 2024. And so now in the last 2 years, there's now institutional allocations taking place into crypto. And because of that, it's probably counter-cyclical. It probably doesn't matter between now and the end of the year, because in any case that we should be seeing a lot of strength. But I would say that the real test, there's really 2 tests that will come up. Is one, is Bitcoin going to follow a price cycle next year, which would be a downturn? And is Bitcoin going to diverge from the equity markets next year? And I think that there's a chance that both take place, and that's why we'll be talking less about a cycle because as you know, Bitcoin also historically followed equity markets pretty closely too.
Interesting. Just for the audience, so if we do go through a 4-year cycle for people outside of crypto, that means that by the end of this year, if we look at previous cycles, we should see the beginning of a bear market and a pretty significant correction. And it goes to my next question is, if we do see a 4-year cycle, how do you see that correction relative to previous ones now that institutions have come in? Finally, the herd is here. Remember, the herd is coming, Tom, in 2017. That was the slogan. Well, it seems that the herd is here in a different form that no one expected. But now that the herd is here, what would that correction look like?
Yeah, again, and now we're being theoretical because I'm not necessarily calling for a correction or a crypto winter. The past crypto winters have been really painful. Drawdowns or declines for Bitcoin from the peak of more than 70%, maybe 90%. And the altcoins and non-Bitcoin doing far worse. I don't. I would say that it's not just institutions that are coming and buying Bitcoin now. I think that there is sovereign purchases of Bitcoin taking place. And, the U.S. government, while hasn't completely articulated its strategy for building a Bitcoin strategic reserve, but we know the U.S., when oil prices are low, they are a stabilizer for oil because they are filling that SPR, or Strategic Petroleum Reserve, at low prices. And that always puts a floor for oil. If Bitcoin enters a winter and the U.S. pursues a budget-neutral strategy to acquire Bitcoin, that means they'll be really active buyers of Bitcoin at lower prices. So if you always have a buyer at lower prices, you're kind of bounding your downside.
In the past crypto winters, Bitcoin collapsed by 70 to 90%, with other coins suffering even greater losses. But Tom Lee believes the future will look different because it is no longer just retail and institutions buying. Sovereign investors, including governments, are beginning to accumulate Bitcoin. He compares this to how the United States manages oil through its Strategic Petroleum Reserve, buying heavily when prices fall to stabilize the market. If the US or other governments adopt a similar approach with Bitcoin, every downturn would be met with large-scale buying. That would create a floor under the price and protect the market from the devastating crashes of earlier cycles. The question is, will Ethereum eventually earn the same treatment? As tokenization expands and financial infrastructure shifts onto its network, governments may eventually see Ethereum not only as a technology platform, but as a reserve asset in its own right. So if you want to stay most up to date on the world of crypto, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 90,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all at the next one, and as always, all the best.